From art to other investments that we hope will interest you, many investors now looking overseas where there may be some opportunities not available to the average investor. Michael Sonnenfeld is the founder of Tiger 21. He calls it a peer-to-peer investment group, and he joins me to explain. Michael, good to see you again. That phrase peer-to-peer leaps in there, and I want to have you explain what it is you do. It's basically a networking group of high net worth individuals and investors.
That's right. Our members meet in groups of 12 people once a month, and they spend an entire day talking about issues that affect high net worth individuals. Most of the time they're talking about investments, how to go about them, how to approach them, how to source them. And then there's the everything else, the issues of philanthropy, children, estate planning. So we have a day that's facilitated and a whole mechanism that helps high net worth members deal with this.
Average net worth something north of 50 million, you were saying.
Right.
Let's move to the question of foreign or international investing. Are the members of your groups putting more of their wealth overseas, and if so, how?
They are. First of all, they're doing it in a number of ways. A lot of people think that international investing means just investing overseas, but a lot of American companies have huge amounts of international exposure, either because of their customers or their materials. So McDonald's, look at all of the McDonald's overseas, or Starbucks, and look at how many materials come from overseas when you're buying or building things. So you can get exposure from the American stock exchange. But a lot of our members are going directly overseas, whether it's direct investment like a gold mine in South America, or ETFs, the exchange-traded funds that are growing rapidly. And one of our members wanted Eastern Europe exposure, but there was no good ETF at the time. So he bought Austrian ETFs because so many Austrian companies were investing in Eastern Europe that he got the double benefit, the exposure of Austria and also the pop. And he rode that from 12 to 30. I think the ETF recently was around 30.
Okay, ETFs one way to play it, obviously mutual funds another way, but let's zero in on those other deals you talked about. One would be very direct investment, where one of your members comes in and learns about a particular company that may be for sale and buys it.
Yeah, and that has a lot of exposures which give people concern. It's not for the faint of heart. You have currency risk. Rule of law is a big issue. The rule of law is different in China than in India, as an example, and in every different country. So you have currency, rule of law, customs. Customs are very different. When somebody says something in one country, it doesn't mean the same thing when they say it in another. So it's not for the faint of heart, but if you have an expertise and you want to do it, the payoff can be terrific.
And then let's talk about private equity funds that individual members of your group, the peer-to-peer group, may learn about, just as you might learn and share information about a private equity fund here in the United States. But many of them would be presumably in China, India, the developing world.
Right. There's obviously some funds that are country-specific. Some of our members have invested in something called the Delta Russia Fund. That was a terrific deal, and others are invested in China, China-specific, and then you have funds that have multi-country exposure.
You say that more of your group's members are putting more of their investable wealth into international. What is a reasonable asset allocation as you look at kind of a pie chart of investments?
Well, as we've talked about before, about 30-some% of our members' assets are in public equities in America, but you'd have to go through one level. A portion of that has international exposure, but in direct international investment, it's about 7.5% and growing. We also have an exposure to commodities. You have to remember that when you want international exposure, if that's for diversification out of the U.S., you can get it with commodity investments and currency investments. You don't have to just buy the stocks of foreign countries.
You know, a fair number of the foreign countries' equity markets have had very nice run-ups. Japan, for example.
India, too.
India as a world. Are the members of your groups concerned that those bull markets may be aging?
Well, you know, they've all had cycles, and each country tends to have its own dynamic. And then there's all the political risk and unknowns, shocks, events. How is the oil crisis affecting that? So I think each country has its own dynamic. And one of the things that's interesting is traditionally private equity has had returns. But if you invested in the India funds, the India stock market in the last year, it's been on a tear. So each market has its own dynamic, and each person has to come to a conclusion of where they think the opportunities are.
The dollar has been weakening against major currencies. Yes. International investing can be a hedge against a weaker dollar, right?
Absolutely.
Because you're putting money over there, and when you repatriate the money, you get more dollars back if it goes your way.
Well, one of the problems is that a pitfall is people sometimes think that international investing is a hedge against the dollar, but actually hedge so that you don't get the benefit.
So you don't get the benefit.
You don't get the benefit.
Right.
So you got to look at the fine print to make sure you know what you're investing in.
Thank you so much. Appreciate you being by again, Mr. Sonnenfeld. Michael Sonnenfeld.